Hey everyone, it's Michael and
Andrew
from Bullion Now, bullionnow.com.au. So we are going to predict the future,
I don't know about that.
yeah, or at least give our opinion on it. So we're going to look at gold first up. And Andrew comes. I'll let Andrew speak for himself in a moment, but Andrew comes from probably a more charting side than I come from. He's more technical analysis, whereas I'm a bit more touchy-feely. With what's going on in markets and attitudes and that type of thing a little bit more. So we thought it might be interesting if we got together and had a bit of an argument on camera. And yeah, we're gonna talk through what we anticipate 2023 looking like for gold and for silver later on.
Yeah, basically, I don't care what the asset is or what it does. I'll just look at the charts, and if I can find something that looks like a good buy or it looks like it's going to move, I will trade it that way.
Your trading's normally day to day, week to week, month to month, year to year?
I don't trade that often, to be honest, but more monthly swings or yearly. It depends on what it is.
Yeah, okay. Alrighty. So do you want to kick off?
Yeah, so there's a few things I'm looking at now in the short term and in the long term where I would buy gold. It's not right now.
You wouldn't buy it right now?
No, I wouldn't buy it right now.
Okay. Why?
There's just nothing indicating to me. I don't know whether it's bottomed and it's going to continue higher, because at the moment it's in the short term it's coming down. Whether it finds some support over the next month or two, I don't know, but I'm just not too interested in buying there until I can find something that indicates to me that it's going to be trending higher.
Okay, so what are you anticipating for 2023? Like, if you're going to say, what sort of price do you expect it to be? You don't have to give exacts, even just trending.
Where I'm looking to buy is if gold comes down. There's two things I'm looking at. One is if gold comes down and puts in a weekly divergence with the RSI, which I'm looking at potentially, is it 1,550?
So in USD?
In US dollars.
Yep, that sounds about right.
And if the RSI comes down and makes a lower high and the price makes a lower low, I'll be looking to scoop something up around there.
Yep.
Just for a short-term trade. There's another one and I'm definitely not promoting Bitcoin here, but I'm comparing it. But I'm comparing it over the Bitcoin chart, and there's something that indicates to me that whenever it's a bit confusing to say without showing it, but whenever the 250-day crosses the 500, which is Bitcoin over gold, is generally a good time to sell your Bitcoin and jump into gold for about 2 months.
There you go. So if I had to pin you for a price in 12 months, where would you expect it, looking at the charts?
In 12 months, what do we got?
So that's where we currently are. Like, this is over the year, and it's ounces on this side, kilos on that side.
Probably somewhere similar to where we are now.
So you reckon it's going to flatline?
I reckon it might drop and then come back up, and it'll be just chopping around.
Yeah, so you reckon
months.
Kind of that mid-17s in US dollars per ounce.
Yep.
Interesting. All right, I've got to say that I actually find 2023 probably one of the most difficult years that I've encountered for a number of years as to where the price is going to be, particularly and I know you've focused on US dollar, and I completely support that particularly from a charting perspective, but practically as an Australian, we need to look at it in Australian dollars as well.
For sure. So
I'm finding it
a different ball game when you're comparing the two.
Yeah, it's next year I'm finding really difficult because while I'm actually slightly different to you in US dollar terms. I think for gold particularly, I think we're going to see a little bit of growth over the next 12 months. I don't think it's going to be huge growth, but I do think we're going to see a growth in the overall USD price.
While the Aussie dollar increases.
This is where I want to separate it out. I want to focus on the two separate markets. So I really do think we're going to see that increase in USD, but mainly because of the uncertainty we're seeing coming through next year. We still don't really know where China sits. We still don't know where the drought in China sits. So for those that aren't aware, southern China's in a particular drought at the moment, and sounds odd to particularly an East Coast Australian at the moment, but they are in a drought, and a lot of their hydroelectric comes out of the southern areas of China. So therefore, they're struggling to make enough power to support their industry at the moment. And also they've got the COVID issues. We've got all sorts of issues coming out of Europe. We've got all sorts of issues coming out of the States, although it looks like they've finally settled those midterm elections down quite a bit.
You've also got Russia, Ukraine still ongoing.
Yeah. So with that uncertainty, particularly for the first half of next year, I would be surprised to see much weakening in the gold price. In fact, I would say we're going to see it probably more towards that $1,900 US an ounce going through 2023.
Where in second half or?
Probably. I'll say the second half. I'd say over the whole year we're going to see that gradual build up to that $1,900 and stabilise somewhere around there. I don't believe it's going to break the $2,000 an ounce next year, which probably means it will, but I don't believe it's going to. I think we're going to push towards that $1,900 and at the moment, I think you're right. We sort of like the norm is that $17 to $1750 an ounce, and I think the more norm is going to be that $1,850 to $1,900 an ounce as we move through next year.
Yeah.
But I think the one that's really going to throw the confusion for, particularly an Australian, is what happens to the Australian dollar US dollar ratio.
Because it's definitely strengthening at the moment, the Aussie dollar compared to US.
Do you reckon it's going to keep it up?
I do.
Do you?
I think it's going to short-term pullback, but I think it's going to continue higher. And if that does happen, then you're looking at, stocks as in NASDAQ and S&Ps and gold and crypto all to move with the Aussie dollar or the dollar index, the US dollar index dropping.
Okay. So I think the opposite.
But that'll affect the gold in Australian dollars because
it'll actually reduce it in price.
Stabilize it or reduce it, depending on how high it goes in US dollars compared to the US dollar index.
So where can you give a price in Australian dollars where you expect gold to be in 2023?
I don't know what the price is at the moment. I'd have to have a look
right at this second, we're sitting at in
2.6,
Australia,
right?
a bit over, I think it is. So we're currently sitting at 2,623 right at this second.
I haven't really had a look at the charts in Aussie dollars, but in about a year's time, probably 25. 25, 26, probably somewhere similar because if US dollar stays similar, maybe 25.
So if the US, you're expecting it to stabilise in USD, but in AUD, you're expecting AUD to strengthen.
24, 25.
Yeah, somewhere in there.
Yeah.
I'd actually go the other way. I think we're going to see a weakening of the Australian dollar. And that's mainly due to I think, continued aggressiveness of the central bank, so of the Fed.
You think they're going to keep raising?
I think they're going to keep raising interest rates for now.
So you think inflation is going to, the CPI inflation?
Yeah, so this is where it gets really murky. I think the Fed is likely to overreact in 23 because 24 is an election year. So they're not going to want to play around too much in 2024 because they're going to be accused of playing politics, whereas next year is an open runway for them. So I think that if they can maintain, or if inflation maintains a high level, I think that we're going to see the US dollar stay strong, the Australian dollar weaken, and I think that's going to drive the price of gold up in Australian dollar terms.
Very possible.
Yeah, that's where I'm coming from. Whereas I think the Australian Reserve Bank, I think will actually stabilise our rates far earlier, and I know I'm going out on a limb and I'm going to be shouted down quite a bit here, but I actually even think second half of next year of 2023, we may even see the easing of interest rates in Australia.
Yep.
Because I think that we're not going to run as far as the US is, and we're going to come back slightly before the US does. And I think that's going to weaken the Australian dollar.
Yeah, it's an interesting one because generally when the US dollar tops out, it was on like a 16-year period. But I think because of the aggressive printing and now the aggressiveness of pulling that back, it was about 7 years from the last dollar index high. Yeah, which is interesting. And I think if they never went so aggressive printing and then aggressive pulling back, I think the bull run would have been a longer bull run.
Yeah, I agree.
But obviously you saw that gold double topped and has pulled back since then.
Yeah.
So I don't know.
Yeah. But I think you're right. I think with all the printing they've done, they've brought forward a lot of that bull run far earlier, And so we're going to I believe we're going to be. It's going to be an interesting few years, particularly next year. I think next year will be pivotal, which is why I'm saying I don't think I've ever had this much trouble.
It's tricky
being confident
in what's going to happen in the market. I'm pretty baffled looking at the charts, going, look, I don't know, and I'm not really interested until I can find something that indicates to me it's a good buy.
Yeah, and that from a sentiment, and I know the charts eventually reflect sentiment. But from an immediate sentiment perspective, I think a lot of sentiment is a real day-to-day thing. 2 days ago I was reading in the Fin Review how, interest rates were going to keep in the US, we're just going to keep pumping forever. And then I was reading on the way into work this morning how now they're thinking
about pivoting.
They're going to be starting to pull back. So we're very much in a very sentiment-driven, very dynamic market in that.
It's very reactionary to what the Fed's saying, isn't it, at the moment?
Or it doesn't even have to be what the Fed's saying. It's what somebody's interpreted, somebody else's interpretation of what the Fed said a week ago or might say in the next week.
Yeah.
I've never really seen this amount of dynamic in a market. It's crazy.
But it is very reactionary. Would you say it's because of the younger demographic getting into the market, whereas they're just kind of looking at whatever's said on Twitter or whatever news is coming out and they'll just react to that emotionally?
I do and I don't. I know I'm copping out on your question here a little bit. I think because of the availability of social media with, everyone's thoughts and all that sort of thing, I think the older generations, so probably from your age upwards, is reacting a lot faster. Yeah. Actually, from what I'm seeing and the conversations I'm having, a lot of the so-called millennial or younger investor, I actually find they're far more stable than, my age, my generation is trying to anticipate and seeing them moving constantly, whereas and we're driving that market to move constantly, whereas they're kind of going, well, hang on a sec, I've got 30 or 40 years to run here.
Exactly.
I don't care.
They've got a long time to live, so they're like, whatever, it's long term for me, and I don't care if it continues to keep dropping, then I'll just keep dollar cost averaging in. Yeah,
and I'm seeing that far more in the younger generation than I am in my generation, which is really overreacting to what they're assuming the millennials are doing, and they're not doing it.
Yeah.
It's really odd.
But as well as the reactionary, do you think that's because of more social media? Like information gets out a lot quicker, so people can see that and then they can go, oh, crap,
absolutely.
I better get out my money out of this. Or
Absolutely. But we're still seeing, funnily enough, those big collapses, like FTX collapsing last week. We can say the spread of social media has made it so we're far more aware and reactionary to things.
Basically, it was CZ, the head of Binance. He said he was going to sell his FTT, and as soon as he said that, it probably should have happened quicker, but the market just dumped, straight off that.
But having said that, if I go back over my lifetime, those kind of reactions have always occurred. Like the 87 stock market, there was no, like in hindsight, everyone went, oh, well, you could see leading into it. But I was there for the 87 stock market crash. It happened overnight. There was no warning. It was exactly the same as FTX, and we didn't have social media back then.
Yeah.
Probably
the same as the 2020 crash as well. That was just straight down, wasn't it? In a quick period.
It was. 2008, although 2008 didn't hit us so much in Australia as it did overseas, particularly the US, but that was almost an overnight thing. The tech wreck of 2000, that was an overnight thing. I distinctly remember sitting in a hangar. I was flying back then, sitting in a hangar listening to the news, and it had literally happened overnight.
Yeah.
There was no warning leading up to it.
This is not related at all, but do you find what's happening in crypto now relating to that tech sort of bubble then? Do you find the two quite very similar?
Very similar. I would say it's on a much grander scale in cryptocurrency, but I've been saying both on this channel and to anyone who listen very, very frequently, this just reminds me of the run-up to the 2000 tech wreck.
Yeah.
It's nothing is ever the same, but gee, it echoes.
For sure. And now on a more longer term scale of where you see gold 10 years down the track, what are you looking for there, or can you not see that? Fundamentals, you can't go that far ahead.
Look, I do. I believe, like when you're going 10 years ahead, I'm quite comfortable going like 100 years behind. And we did a video, and Ruben, we've really got to redo this video very, very soon. We did this video of, the price of gold in 1971 compared to the average house. And then we fast forwarded to 2020, the price of gold, the average house in Melbourne, and it was still 330 ounces of gold. In 10 years' time, give or take little glitches, they'll never run exactly the same. But the longer you go, the more sure you can be that gold is going to keep match with your purchasing power over time. Whether we go through hyperinflation or deflation or stagflation or any other type of inflation you want to bring forward, wars, famines, the whole lot, over time, gold has proven time and time again that it will keep up with your purchasing power. What you can purchase today was what you'll purchase 50 years ago, is what you'll purchase in 50 years' time.
Yeah. The other thing I was looking at was, so gold had a 10-year run from the 70s to the 80s. Then it had a 20-year
hiatus.
Yeah, pretty much. It's not a bad way to put it. And then it had another 10-year run, and then it did have a small drop and then a small increase. Do you think it could go, which has been about maybe 5-10 years since that? Do you think it's going to do not much for the next 10 years?
No, I think it'll keep. It depends on what happens with inflation, but it will keep up with the purchasing power of inflation. So you're right, that 20-year hiatus that you mentioned there, you've got to look behind why did that occur? Because that wasn't. If you go back over time, gold doesn't keep having that 20-year hiatus.
No, it doesn't. It's not.
That 20-year was a specific move because central banks diversified away from gold into USD. Because we saw after Bretton Woods for many decades, like Bretton Woods was just at the tail end of World War II, but we saw for many decades there where central banks, and we've spoken about this before, the tier one asset was the US dollar. The world agreed that was going to be the tier one asset.
But the US dollar did have a good drop in between there. It had a massive drop, and gold did pick up for a few years.
We're talking in the late 70s.
The 80s, I think.
Early 80s, yeah.
When the US dollar dropped, gold did recover, but it only managed to put in a lower high and then go do nothing for another.
But you've got to look at the political environment around there as well.
Yeah.
I agree that charting shows these things, but it's a mirror reflection of what's going on.
So I don't know. Yeah.
But you look at the late 70s, we're dealing with hyperinflation, all those sorts of things. So there was a movement away from, the same as there is now, there's a movement away from fiat currency and more into that physical, I need the asset. Then you rolled into the central banks ditching their gold because they were far better off holding US dollars than they were physical gold because they could borrow against a USD 1-to-1, whereas they couldn't borrow against gold 1-to-1. Yeah. So they unloaded it. We saw that for 10, 15 years. Australia did it, Canada did it, the UK did it to a degree. A lot of the Yanks didn't do it, funnily enough. But a lot of central banks just went, let's get rid of it. And it wasn't until kind of those 2008 onwards where there was this push by the central banks to go, actually, we don't like the way the US is both weaponising their currency, but also the way they're dealing with their economy. And they wanted that diversification away from the US dollar. Yeah. And we saw that in that Basel III, we saw them bring back gold into a tier one asset. And we've now seen from there that drive upwards of the acceptance of gold and the price of gold to a degree.
So are you seeing countries or big companies that are buying gold for long-term reserves?
Yeah, I would say absolutely. We're seeing more of the slightly outside of mainstream countries. So we haven't seen Australia buying gold yet, although there is a very good argument that we sit on so much gold, why the hell would you own it? Because we are so naturally resource rich.
Yeah.
But there is a real argument for a lot of other countries.
In England anyway, don't we? Is that what happens?
We do store a lot. Well, I mean, again, people get, and we see it, and this will probably flare it up in this channel, like in this chat, where you do see that a good chunk of Australia's physical gold is stored in the UK, in the London Metals Exchange. But again, we're sitting on a whole stack of gold. Why the heck would you store it here? For diversification purposes, why wouldn't you store it in the UK?
Yeah, it makes sense, I guess. Are you saying something's going to happen?
No, but I am saying, like, if you owned a whole stack of gold in Australia and you had the option of diversifying and storing it overseas, wouldn't you do it?
Yeah, look, you raise a good point. I never really thought about it, but yeah, I can see where you're coming from, and I probably would agree with that.
Like, if the Australian...
Just in case something happened, Yeah. I would probably...
Or we need to move it quickly. And the other thing we don't talk about is the Australian government actually earns interest on having their gold in the UK because they lease it out.
Sure.
So isn't that a wise use of your resources?
Yeah, I think so. Yeah. Send more gold to the UK.
Well, I'm not necessarily saying that, but I'm saying
I can see why they do it.
It's a diversification. It's a good idea. When you look at it, when somebody says, "Oh, Australia's gold's in the UK," we freak out. But when you actually draw the bigger picture, it actually has some merit to it.
It does make a lot of sense.
I'm not saying that I trust politicians, but I can put forward an argument for this case.
I don't think anybody does. But what I was looking for long term was the US dollar index. Looking at it on a 12-monthly chart, whenever it has 3 years or 3 or 4 years of
Strong growth.
straight up.
Yep.
When you have one year coming down where the candle takes out the previous top candle, the red candle will take out that previous last green candle. That's where I would be looking, and it closes that full year, which at the moment it's not even red. So I'd be waiting for next year. If it could come down, I don't know if it will, but if it does and it closes below this year's candle, I would be looking to buy at least for a couple of years and then holding it for that period of time. I'd be pretty confident holding long term for that.
Yeah.
Yeah.
I agree.
But I don't know if that'll happen.
I honestly, I think we're going to see that. We're not going to see that huge run up. So it wouldn't shock me to see that candle closing below. But I think a lot of it's grey, more murky and grey than I've ever seen before.
Yeah.
Moving forward, longer term, I think what we should do is revisit this conversation kind of June next year, because that will have got through the Northern Hemisphere winter. It'll have got through a lot of whatever China's doing at the moment, and I think we'll see some stabilisation out of the US. And I think at that point we can now start to say, yeah, okay, we're going to see it stronger or we're going to see it weaker at that point.
Yeah, sounds good to me.
All right, we're going to take a break there. So that's gold. Where we think it's going to be, Andrew seems to think in USD terms it's going to stay about where it is or ease a fraction, whereas I see it staying where it is or strengthening up to about that $1,900. And then both of us are kind of opposite ends of the Australian dollar US dollar ratio, which impacts gold price from a local perspective.
And as you said to me before, if I'm right, I get to keep that.
Yeah, that's right, the kilo. And if you're wrong, you lose your job.
I don't know about that. Too valuable, right. Michael.
So, whereas with the US AUD scenario, Andrew sees the Australian dollar strengthening, which will cause a weakening in the gold price in Australian dollar terms, and I see the opposite. So it's interesting that even amongst us, we can't agree.
Yeah, but it's really hard to predict at the moment. It's not an easy market at the moment. It's very confusing. Totally
agree. And I think we'll get to, if we do a review in 6 months' time, I think we'll decide we're both wrong.
Probably. The market always finds a way to prove you wrong.
Yeah, that's exactly right. All right, tune in again another time. We're going to do this all over again, but for silver. So stay tuned. We'll see you soon.